things just straight through YouTube instead of using StreamYard, and it was not working. So we had to come right back to StreamYard really quick. We'll try to troubleshoot and figure out what was going on with YouTube Direct. Anyway, we'll have Sebastian work on that as soon as we get done with the live stream. So I'm gonna there's a little bit of a lag on StreamYard, the software. So I'm gonna have to wait for the chat to populate before I start before I start answering questions. Let's see. So in the interim, what I can say is make sure you guys go to Rebel Capitalist Pro. I've got my t-shirt on to promote my new service, my new investing online, or my online digital product. It's a service that I partnered up with Chris McIntosh and Lynn Alden. They've got their research, and we've got a member forum. We do live streams every time either Lynn or Chris comes out with a research report. So you can get on there, ask them questions. It's going phenomenally well. The coolest thing about it is the forum. I go on there occasionally and just check out the content that's being created by the users, and it's really, really quite amazing. So when you guys are done with the live stream, check out Rebel Capitalist Pro. It's georgegammon.com/pro. And I've got to wait for StreamYard. Well, one thing I can say is I was able to book a humanitarian flight out of Colombia for Friday. So we'll see. We'll see what happens. We'll see if it pans out. It's kind of, I booked the flight, and I don't want to get too excited about it because it doesn't seem real, because I've been here locked into the country, or in lockdown in the country for so long. It's been almost 5 months now, and hopefully I can get out. But then I got to figure out where to go. The flight right now is going direct to Fort Lauderdale. And once I'm in I don't really want to be in the United States. I don't want to go from the frying pan into the fire, so to speak. You're just leaving some of the downside. The downside here in Medellin is just that nothing's really open. The restaurants are kind of quasi open, just doing takeout, but everything else is shut down. But going back to the U.S., I mean, I don't want to deal with any of the rioting or any of the social unrest. So I'm going to go to the Caribbean. It's just figuring out which place to go. All right. So for some reason, I'm not sure what's going on. Let me try to go back to YouTube. Okay, so now I'm back at YouTube so I can see the chat stream, but I'm not sure that you guys can still hear me. In the chat, can you guys tell me if you can hear me and see me right now? Okay, so Jay is saying that you guys can hear me. Stan is saying you guys can hear me. Neil, okay, good. So I can't really see myself, but I guess as long as I can see the chat stream, we should be good to go. So yeah, okay. Now there's like a 30-second lag here from what I see and what you guys type in. And so now everyone's saying that they can hear me loud and clear. Okay, cool. So I'll just keep doing it like this. I'm on two different screens. It's really difficult, but we'll just go right off the chat here. And if you guys do have a problem hearing me or seeing me, just let me know in the chat, and just so I know that I'm not talking to myself. Oh, gotta love the technology. So let's start off with a question. I'm going to try to go. No super chats again, guys. I don't know if you were with me last week, but we didn't do super chats just so I could knock things out in an hour. We're going to do that again. So I'm just going to go through the stream and look for some questions. So let's see. Emily is asking, hey, George, would be great if you could talk about option trading, security call, and stuff like that. Maybe explain a good way to protect your investment. Emily, I would suggest checking out the 6 videos I've done with Patrick Ceresna. 4 of them were on options, and then 2 of them were on building a dragon portfolio. He's so much better at that stuff. I mean, I'm just scratching the surface. I'm a beginner at best, and Patrick is an absolute expert. So check out those videos when you get the chance. That's the best thing I can, or the best advice I can give you. And guys, if you've got a question, please type in a question to start and capitalize it so I can sift through what the questions are then compared to just the comments. Okay, Walk with Josh says, do I think a March crash will happen again? I don't know that a crash will happen. Now, that doesn't mean that I don't think we're in a bear market, or we'll go back into a bear market. Things just don't have to drop off a cliff. They can grind slower. I just don't think a lot of the second wave of the virus coming through is priced into the market. They just see this V-shaped recovery. And even if there weren't any, even if, excuse me, a lot of the states weren't going back into lockdown mode, or people weren't just going back into lockdown mode themselves, you're not going to get a V-shaped recovery. There's just too much damage that's been done. And if you look at I did an interview with Jim Bianco as an example, where Jim explained going back to 2009, 2008, the economy got down to like 90% capacity. So, the output was about 90% of what it was prior to the GFC. And so just that 10% gap gave us what we know as the global financial crisis. So if that's just going down 10%, there's no way we've only lost 10% of economic output permanently, unless somehow the government continues to do stimulus, which they most likely will. But then you'll just see things such as consumer prices inflate, and it's not going to be a quote unquote recovery. We got a long way to go with this thing. And whether you think it's legit or not, unfortunately, from an investing standpoint, that really doesn't matter. So you've got to look at what just the behavioral patterns with human beings and what they're doing, and then factor that into your base case for what you're going to do with your portfolio. I mean, that's the main reason I'm leaving Colombia right now. It's not because Colombia is not great. I mean, the weather is still fantastic. I'm going to go for a nice jog after lunch today. I've got my whole setup here. I've got a personal chef. I've got the gal that does my cleaning. I mean, I've got all the employees here, most of them, and I've got all my real estate projects here. I've got a great infrastructure, but I think the next 6 months are just completely unknown. I mean, what's going to happen in the United States? Are the cases going to go down? Are they going to go back up? What's going to happen with the election? I mean, all of these things, who knows? I mean, 2020 has been such a insane year that I'm just trying to get away from it all and just kind of reset and figure out what the best game plan is. Just go somewhere where you've got a little more mobility. So anyway, that's how I'm kind of going long volatility. I know I've talked about that quite a bit. So Raymond asks, hey, George, can you explain to someone that's receiving unemployment until they return to work on where they should start and when it comes to growing wealth instead of keeping it in savings in a bank? Honestly, if you don't have anything saved up, Raymond, and you're on unemployment, I think savings in a bank isn't too bad. I mean, you're in no jeopardy of getting to the 250,000 FDIC. And I've said many, many times that that should not be a safety blanket. You should still do your due diligence on the banking system, because that can go bust. And it's definitely, if you look at their liabilities compared to their assets, they'd be wildly insolvent. But they'll most likely get a bailout if that were the case. But if I was in that position, Raymond, I would focus on education. And we've got YouTube now. That's how I taught myself. You've got podcasts like Macro Voices, Real Vision. You got the Rebel Capitalist Show. That podcast is actually booming, believe it or not. Our numbers are going through the roof on the podcast. So thank you all if you're a listener. I would start there, just educating yourself. Start saving some money. I mean, I don't like Dave Ramsey at all. Most of you guys know that I really, on a personal level, I really dislike Dave Ramsey. But why is that? Because he really was hard on Peter Schiff's dad, and I just, ever since then, he's really rubbed me the wrong way. So anyway, but what he says about having no consumer debt and having like 6 months in savings of your expenses, that's smart. I mean, that's just common sense stuff. So I would start there, and then I would start listening to Miles Beckler and just absorb as much of his content as you can. Why do I say that? Because he gives all of his content away for free. He's someone that is an entrepreneur, but he's actually done it. He doesn't just teach you kind of what to do. And he really focuses on online businesses. And if I didn't have much money, the first thing I'd do is try to educate myself. I'd save some. So I had a rainy day fund, if you want to call it that. And then I'd try to save up like $5,000 as fast as I could. And with that $5,000, I would start an online business where you're providing value to a group based on something you really enjoy talking about, or something that you've got a lot of skills in. That's exactly what I would do if I was on unemployment right now. Okay, Jay asks, George, what are your thoughts on long short funds to play long volatility, as has been posted on the Rebel Capitalist forum? How to best choose? What are your thoughts on long short funds? So I think what you're probably saying, Jay, is you watched Patrick's video, and when he talked about the moving averages, as far as the 10-day and the 20-day, when they cross over, when they cross over one way, you go long. When you cross over the other way, you go short. I assume that's what you're talking. Or maybe that was on the trend following. I'm sorry. I'm getting them mixed up. No, I think that was on the trend following with commodities. So as the thing I really get concerned with there, Jay, is that you've got a negative carry, most likely on the long. On the short, you've probably got a positive carry. And how do you, if you're going long volatility, see, it's going long volatility. It's not going short volatility, because you're thinking about this through the lens of the Dragon portfolio. I just don't like those funds. I mean, the short fund's going to pay you, but that's not really what you're looking for. You're looking for long, and then you're going to have a negative carry. And it really defeats the purpose, because the point of being long volatility isn't just for the next 3 months. The point of Chris Cole's paper is to be long volatility forever. Just it never changes. You're always long volatility. The only thing that kind of changes back and forth is the trend following. So I would go back and listen to Patrick's video. And if I'm not, I might not be remembering everything, because I try to cram all this stuff in my head. But if my memory serves me right, the only thing that you go back and forth on would be the commodities trend following. And if that is the case, then you're long vol, you're going to have a negative carry if you do a fund like that. And I don't like that negative carry, because it's not a long-term play. Christopher asks, if rates go negative, would the USD lose their world reserve currency status? Not necessarily. It wouldn't be good for it, because it depends on how negative compared to Japan and Europe. But it's, I mean, you'd have a lot of capital flight out of the United States. It would definitely be dollar negative to a certain degree. There are always cross currents, of course. But no, it wouldn't just immediately lose its reserve currency status. Okay, guys, sorry for the pause here. Just trying to get a question. Stacy asks, why Medellin and not Bogota? Is it strictly for the real estate market that is there? Starting language school when travel restrictions open? Medellin, when I first came here in 2015, Medellin was a lot cheaper than Bogota. And not only just literally cheaper, but also from a standpoint of historic values. So that's what brought me here originally. And then Medellin is gorgeous, absolutely gorgeous. I don't really like Bogota too much. It's really busy, and the weather's okay, but it's not that great. Medellin's like a paradise. If you're someone who really values good weather like I do, then yeah, man, you're going to love Medellin. It's perfect. It's the Valley of Eternal Spring. The weather never changes. And so if you like 80-degree days and 67-degree nights, then you're going to love it here. And so it was kind of a personal decision, but also the real estate was a lot cheaper. I mean, Tyler asks, hey, George, question, why not buy Canadian real estate? I know it's not cheap, but wouldn't it be around the same price as rent? No, not even close, Tyler. First of all, you answered you answered your own question. I know it's not cheap. So don't buy it, Tyler. But seriously, when you've got an RV ratio that's like 0.3, really when you've got an RV ratio that's getting down below like 0.7 or 0.6, if you do the math, it's going to be cheaper to rent. And my goodness, what are the RV ratios in Vancouver? Probably 0.1. They're terrible. So no, it's going to be cheaper to rent, buddy. Okay, Mark is on there. Thanks a lot, Mark. I thought I turned off the super chats. Oh, maybe you're just giving a like a sticker thing. I appreciate it. And happy 4th of July to everyone as well. I kind of get out of that mindset because I haven't been in the United States for so long. Okay, John asks, George, things in the US are getting really bad. Yeah, I know. I know. Can you do a video going over the steps to become an expat and leave this dumpster fire? It's pretty straightforward, John. Just pack your bags and peace out. That's it. That's pretty much what I do. One story, I don't know if I've ever told you guys this story, but back in, I don't know, it's like 2013 or 14, I don't know, or maybe it was even later stages of 12. But I had a place in this area of Las Vegas called Spanish Trail, and there's a couple golf courses there. It's kind of a gated community, supposedly very secure. And I was leaving for a month to travel. I can't remember what countries I was going to, but prior to leaving, I was like, I've just got too much stuff. I've got this artwork. I've got all of these electronics. I just need to put stuff in storage and just really simplify my life a bit. And I got back a month later and I opened the door to my place. I looked in there and everything was gone. And just like a split second went through my head because I just had like a flashback of me remembering that I was telling myself that I needed to put everything in storage. I kind of thought, wait a minute here. Did I put everything in storage? I guess I must have, and I just totally forgot about it. And then, I kind of turned the corner and some stuff was on the ground and stuff. And then finally it hit me that I got robbed. And they took everything. They took my artwork. They took my electronics. They took a lot of my watches, some of the fancy watches I had. And for like 10 seconds, I was like, oh man, that sucks. Like, come on, really? And then it hit me. I'm like, well, wait a minute. This is awesome. I'm like, sweet. This couldn't have happened at a better time because now I don't have to put all this stuff into a storage unit, which is a big pain in the ass anyway. And then I don't have to pay for a storage unit. And yeah, they took a lot of my clothes. They took my watches. They took but so what? Who cares? They could have it. Now I'm just a lot more free to travel. So ever since then, I won't buy more than I can fit in just maybe 2 large suitcases. So I just have maybe 5 pairs of shoes. You guys see what I wear in the videos. I mean, I've got like 5 jackets and I got to just switch and rotate them. I've got a few shirts, got a couple pairs of shorts, a couple pairs of pants. That's about it. And so it's just a great way to live. I know it's not right for everybody. But just like with this humanitarian flight I was talking about, I'm just going to pack up my stuff into my 2 suitcases, got your carry-on, your computers in there, and you're ready to rock. The only thing I have now that I can't really put in those suitcases are these computers, like I'm doing this live stream on. You can just buy another computer wherever you are. So I much prefer living kind of that minimalist lifestyle, and then wherever I go, I just get a place that's already furnished, and you just got this mobility. And especially going into the next 6 months or year with what's going on in the States or the virus, or boy, I want as much mobility as possible, because you never know where you are is going to shut down and just do something crazy. So that's how I do it. I don't know if that answered your question. Went off on I'd be an expat. Yeah, that's it. But what I would do is, if you're thinking of actually moving somewhere, you want to go there and spend some time. You want to hang out for a couple weeks, a couple months. That's what I would do. Is I'd start like a watch list, just like with stocks. And I'd say, okay, where do I think I would enjoy spending time? And then when the virus is in the rearview mirror here, just take 2 weeks, go to those places. Maybe it's Thailand, maybe it's Colombia, maybe it's Croatia, maybe it's Montenegro, who knows where it is, and then just go to those places for a week, test them out. Maybe you'll hate it, maybe you'll love it, and then kind of narrow it down and then make a decision, and then just kind of streamline your life. Go there. I'd maybe rent an Airbnb there for 3 months to make sure that you really enjoy it, and then maybe do something a little more permanent. But as far as what most people worry about, like getting visas and, oh, how am I going to find a gym, or all that stuff is easy, super, super easy. People worry about, they create roadblocks that don't exist. And I don't worry about that stuff. It's super easy. Okay. And again, I apologize, guys, for being unsmooth and a long pause here, but I'm just having to do everything off this live stream or off the little chat thing. Okay, now I'm to where everyone was saying yes. Oh, here's a question. Ike asks, will communism and this Orwellian destruction of history, do you think, lead to fascism taking over the United States almost exactly how it did in Weimar as it turned to Nazi Germany? It depends on how you define fascism. If you just get so convoluted with all the crazies in the United States right now. But there's a lot that goes into fascism. If you actually look at the definition, it's not just a nationalist mindset. It's also where there is private property rights to a certain degree, where the private sector owns the means of production, but they're completely controlled by the government. And I think there's an argument, if you just exclusively look at fascism in those terms, from an economic standpoint, not really layering over the racial component there. If you just look at it economically, I don't know how you can argue the United States doesn't fall into that category already, with the bailouts, everything the Fed's doing, the stimulus packages, the laws and regulations that are coming down from the government on businesses right now, large and small. How could you argue that we don't have something where the private sector has ownership to a certain degree, but the government controls everything? I mean, I was listening to a podcast yesterday, Jeff Snyder and Emil Kalinowski's new show, and the episode they just came out with. And it was kind of fun because Emil set it up like a game of Jeopardy. But he was the final question, or one of the final questions he asked Jeff was, what role should the central bank play? And Jeff really just breaks it down. And when you think about what it should play, or the role that it should play based on how it was set up originally. Now, going back to my my video the other day, there's some things that may be a little suspicious about the Federal Reserve, but just taking it at face value, the way it was set up, it was only set up, or any central bank really was only set up just to expand or contract the money supply with the economy, just to give it as much currency as it needed to function on all 8 cylinders. It has nothing to do with what they're currently in the process of implementing. So if you just think about how much smaller it should be, anyway, I don't want to get sidetracked here. I could go off on that for the next hour, but let me focus more on your question. Do you think this will lead to, I mean, from an economic standpoint, I think we're already there. From a nationalist, I don't know if you want to call it racist, racial. I mean, people throw those words around. They really have no meaning anymore. But from that standpoint, I don't think so. I've been all over the world. I know a lot of people on the left don't like to hear this, but the United States is probably the least racist place I have ever been to in all my travels around the world. I'm not saying that there's not room for improvement, but you got bigger fish to fry in the United States right now. That is for sure. So do I see it turning into Nazi Germany? No. But potentially Weimar, maybe, if we get some, and there it depends on how you define hyperinflation. I see us having potentially consumer price inflation, just like we had in the 1970s, if not a little bit higher. Some people would categorize that as hyperinflation. Most people wouldn't. So I don't think that you're going to see a Weimar Germany as far as that rate of inflation like a Venezuela, just because the dollar is the reserve currency. But I do think you can see some price inflation, or you will see some price inflation in the United States over the next year that will really create a lot of pain for the average person, unfortunately. Okay, next question. Would it be best for the world economies to work together? A lot of videos being made recently about game theory, infinite games, and universal currencies. Would it be best for the world economies to work together? Yes. I'm right along with Friedman on this one, where that is a superior, just free markets and open economic borders and doing business. Yes, I'm totally down with that. I think that's a great idea. There's going to be a lot of people that are going to argue that if we get all of our stuff made overseas, then what's going to happen is we're going to be too reliant on those countries. I totally get that, but I think you've got to do a cost benefit analysis. And then you've got to just ask yourself, okay, if we're not producing stuff in the United States, why? Why aren't we? And you say, well, we just can't because we have livable wages. Well, no, that's not true, because look at Germany. They're an export powerhouse and they've got very high wages. So it's a question of, in my opinion, regulation. If you reduced a lot of the regulation and made it reduced taxes to make it much more friendly for competition and capital, then you could dramatically increase the amount of goods and services that are produced in the United States. But if you continually have a bigger and bigger government, and going back to the video I did a couple weeks ago, I don't know if you guys saw that one, but back prior to 1930, the government spending represented under 10% of the entire economy. That means the private sector was over 90%. So that's good. That's fantastic. Now it's only, at the time of the video, I just looked at some historical data, and it showed that it was at 40%, so 60% private sector. Now, with everything, with the stimulus and the virus and everything we've got going on, it's gone up to 50-50. 50-50. Think about that. 50% of the entire U.S. economy is government spending. I mean, there's just, if you work the math, which I'm not going to do on this video, or I can't do here, I'd need a whiteboard to do it. But there's just not enough. You can't squeeze, once you're at 50-50, you can't squeeze the private sector enough to extract enough resources in the form of taxes to change directions and to handle the deficit and to handle the debt and to make it sustainable. It's just, as a thought experiment, just take it to an extreme. What if the government spending was 99% and the private sector was 1%? Okay, how do you how do you get economic growth if the private sector is only 1%? How do you sustain a deficit, or how do you sustain a debt load of 120% of GDP when the private sector is only 1%? Obviously, you can't. Take it the other direction. What if the private sector was 99%? Boom. All of a sudden, how hard would it be to get the growth we need to handle our debt loads? It'd be a heck of a lot easier. So why isn't it 99%? Because of the warfare state, the welfare state, the expansion of government. I don't care if you're on the left, I don't care if you're on the right. Your party has expanded government over and over and over again. It's just right or left is the same in the standpoint of they all want bigger government, and you're just gone off on a tangent here again. It's a lot easier for me to go off on a tangent when I can't see myself talking. It feels like I'm just talking to the computer screen. But let me go back to the question here to make sure. Oh, why the world economy is right. So my point was with the United States and it increasing exports, increasing its self-sustainability, if you want to call it that, then it's a matter of reducing regulations, reducing taxes, and making it more friendly for business and competition. Yeah, but see, he says problem with open trade is every country has different regulations and taxes. Right. But so every country should compete with one another, just like a free market system. So if you've got a country that is overregulated or has excessive taxes, then they lose, and capital is going to go where it's treated best. And if you continue that, then countries, it forces them to behave. It's like the way the United States is supposed to be set up, to where you've got competition. The states are competing against one another and trying to get better and better and better and offer more services at a cheaper price. That's what states should be doing. That's what countries should be doing. So, yeah, you're right. Every country has different regulation. And the ones that have bad regulation and excessive regulation and taxes, they should lose producers that go to countries where they're treated better. And much of the world and low wage countries have no benefits, so impossible to compete. How does Germany compete? How does Japan compete? This is not. Yeah, I don't think so. I just don't see things this way. And look at Singapore. Look at Hong Kong. Not now, but prior. I mean, you're looking at places that are much more business friendly. When I was in Singapore, I don't even think they had a minimum wage. If they had one, it was just negligible. This would have been back in 2010, 11 or so. And it's the richest place I have ever seen in my life. And so I think you guys get my point with that one. I just, countries should compete, and just because you have low, and by the way, let's just say the low wage countries do have a competitive advantage. Well, they're not going to be low wage countries forever. And isn't that a good thing that we want those people, the people that are earning those low wages, to actually have the opportunity to earn a wage at all and to have their economy expand and to continue to grow the pie? Look at what's happened since, let's say, 1990 with Europe and with China and with Asia as a whole. Has that been good for the world or humanity as a whole? I would say yes. And I have a very hard time also with and I understand that you've got to take care of your own family first and your own country first. But I hate to just completely ignore everyone else in every other country, just saying, well, if they're benefiting, I don't care because they speak a different language, they have a different culture. I mean, they're still human beings forever, for heaven's sake. So I think you got to factor that into the equation, but I don't want to go off on that too much here. Okay, Josh has a question. George, please, a few of us might understand your rants on the global policy. Policy, even domestic, but that's not helping us out in the rat race. Yeah, sorry about the rants today, guys. It's actually, believe it or not, it's hard for me to focus here when I see nothing but black. So let me get some questions to get more to the point. You guys are right. I'm going off on tangents, and that doesn't do anybody any good here. Here we go. Christian, George, how do you see the Colombian peso against the US dollar in the next 5 years? Start with oil, Christian, because the Colombian peso is loosely correlated with oil. So if you think that oil is going to be higher in the next 5 years, then I would be bullish on the peso. And it's very, very cheap right now. The downside of the peso is their oil reserves are rather limited, but they're doing a lot where they're expanding the economy here and diversifying the economy. And so if you have to ask me, is the peso going to be higher or lower than it is right now in 5 years? I'd say it's going to appreciate. It's at 3,600 right now. In 5 years, I wouldn't be surprised if it's under 3,000. Okay, Ross asks, what are your top U.S. rental markets for investments? Well, the linear markets I usually talk about, Ross. I like Kansas City, but that's just because I know it so well. And the areas of Kansas City I really like are Blue Springs and Lee's Summit on the Missouri side. The Missouri side is a little more landlord friendly. As far as the other markets that I like, I would defer that to Hartman. And he's my good buddy that's an absolute expert on rental properties, linear markets. And it's not that you have to work with them or anything like that, but just go to his website, jasonhartman.com, and look at the markets where he's actually doing business right now. And those are the markets I'd start with, because he's just doing all of that due diligence for you. So you can start there and then kind of do your own homework from a bottoms up approach once you kind of see his top 10 favorite markets. That's how I'd do it. Romesh asks, how do you think the Indian economy will do in the near term? I'm not sure, Amish. In fact, in the near term, I don't really let the near term affect my investment strategy. I talk about it in my videos all the time because I enjoy thinking about it. It's a big puzzle that it's fun to try to put all the pieces together. But just because I think the stock market, as an example, or the United States economy may be getting worse over the next couple of years, I really wouldn't let that play too heavily into my process as far as what I invest in. Yeah, Rain asks, do you think we'll get basic income? And what do you think the consequences will be? Simple. Yes, and consumer price inflation. How's that for not going off on a tangent? All right. Next question. George, you mentioned in your last videos the owners of the Fed website states no one owns Oh, wait a minute here. George, you mentioned on your last video the owners of the Fed. The Fed website says no one owns it, and the board of governors manage it. Well, I think they say that the banks own it, but then you got to ask, okay, who owns the shares in the banks? So I would look at that video. I linked to it in the description, I believe, of my YouTube video, and it outlines it more extensively. Brendan asks, what's the best way to hedge against consumer price inflation? Well, gold, you want to have 10% of your, at least I do, 10% of my portfolio in physical gold. That's always your insurance policy there. You want to be in hard assets, and then ideally you'd want to have a 30-year fixed rate mortgage on a property that's producing positive cash flow. In my opinion, that's your best way to hedge. And then if you want to take it a step further, I would diversify my portfolio from a standpoint of the currency risk and the political risk, and that's going to give you an even better hedge. So let's say you've got 60% of your portfolio in USD denominated assets, but you've got 40% of your portfolio in assets that are denominated against other currencies that hopefully aren't really correlated. And that's, in my opinion, the best way to hedge against the CPI in the US. Stay Curious asks, do you think we'll go back to a gold standard? Boy, probably. I don't know what I'd give it, like a 70% or an 80%, but I would say it's definitely above. Yeah, I'd say it's definitely above 50-50. Within the next 20 years. Okay, looking for another question. EB asks, buy home with savings or mortgage. If you're in the US and you can do a 30-year fixed rate loan, EB, and you're not, I would do that all day long, because you're just you're shorting the dollar, and especially if it's a rental property, you're getting paid to short the dollar. STP says, George, what would it take for the US to go to negative interest rates? I think number one, you'd have to see another shock to the stock market. So let's say the stock market goes down like it did in March, then the Fed steps in. They try to boost the market through talking it up, which is really all they can do right now because they've done all the quantitative easing. They'll probably buy equities, and then you're going to have more stimulus. And for whatever reason, if the stimulus, the fiscal stimulus, and the Fed's QE and all their programs didn't stop the market from going down, the stock market, and then real estate started to go down, you see the unemployment rate start to really go up. I think that's where they get into negative interest rates. I think it's just going to be kind of the nuclear option for the Fed, because that has a lot of ramifications with treasuries. It's just, when you look at Japan, when you look at Europe, the other options for capital, there's a lot of moving parts, and I don't think the Fed wants to go there. But if there's no other choice, I think that's what they'll do. Do I think there'll be a war between China and the US over Taiwan? I'm not sure over Taiwan, but unfortunately, the way things are going in the US and in China, I'm not going to say a war is probable, but I wouldn't be surprised. let's see, guys, this thing is really moving fast. Oh, there's a question. Make sure, guys, if you do have a question, please, you're putting question in capital letters, because this is really super hard for me to follow. Okay, Louise asks, do you believe there's manipulation in the gold market with derivatives? If people demand physical metals, the LBMA could go bust like banks using fractional reserve. There might be, but I don't put too much thought into it, because for me personally, it doesn't really matter. I just like to just have 10% physical gold. If I get another $100,000 for some reason, I just buy 10,000 in gold. So whether it's manipulated or not, I think it might be, but over the 5-year, 10-year, 20-year time horizon, I don't think it's going to matter too much. Do I think the gold price could fall again if the monetary policy works out like 2009? Not really the monetary policy too much, more so the repo market and the liquidity issues and the balance sheet capacity of the financial institutions that are all in the mix here, and the plumbing of the financial system. I don't know that you're going to see a big price drop like you did in 2008. I think we might have already seen that. And I think they're trying to get some more liquidity so they don't have to sell their gold. So it would surprise me. It's definitely possible, but I would be surprised. I think it's kind of like a 2008 where that happened, went back up, came back down, and then once they started QE with providing the liquidity to the financial institutions, then gold started more trade on the fundamentals. And since the Fed was printing all this money, it started to go up. You had that big bull market in gold. I think that's maybe what we saw in Q1, where you just had, or in the first part of the year here, where you had gold just sell off dramatically because of the liquidity issue. Now that, I don't want to say the liquidity issue has been solved, but there's a band-aid over it. Now it may trade more so on fundamentals, and you'll have that bull market going up. I think that's probably a more likely outcome, although nothing certain. Brandon asked, George, can you recommend a good newsletter focusing on gold miners? Well, Chris does a lot of that with Rebel Capitalist Pro in his newsletter. Lynn gets into that a little bit, but as far as gold miners specifically, I would say if you go to Chris's website, Capitalist Insider, he's got a newsletter that he doesn't do. It's his investing partner, and I can't remember. I think his name's Jamie, but I would check that out. And I like Marin's as well, Katusa. So I would look at those two and kind of decide which you like the best. Those are the two that I've read in the past. So here's a question. Do you think the Fed will crash the dollar in order to bring in a new world cryptocurrency that will save us from hyperinflation? Well, that's kind of a weird way to phrase that, because if they're crashing the dollar, then that could be hyperinflation in and of itself. So you wouldn't be saved from hyperinflation. But, well, the Fed crashed the dollar. I don't think they want to crash the dollar because they want to retain some leverage with the swap lines. But I don't think they're going to like it if it goes up to 110 or 120. That's for sure. But I don't think that they're going to necessarily do this to bring on a cryptocurrency. I think what they'll do is they'll use the UBI and the helicopter money. Because if you guys remember when they did the stimulus checks, it was very difficult for them to actually get the checks out. It was very cumbersome. And I think what they'll do is they'll go to an app type system where it's on your phone and they just send you the money directly. And that's how they transition over to, I wouldn't call it a cryptocurrency, but a Fed based or treasury based, government based digital currency. That's kind of what I see playing out before you would have a situation like you're describing. Let's see. So question, what portfolio asset allocation do I recommend? It's really simple. Just 10% physical gold, 80% in things that pay you to own them. That's how I'd define investments. And then 10% in speculation. Understanding that you're trying to buy stuff when it's cheap, especially the cash flow, the speculative side of the portfolio. The gold side, I just buy regardless. That's how I do it. I think if you want to get a little more sophisticated, I'd look at the Dragon portfolio and see how you could maybe set things up that way using the baseline principles that I referred to. Okay. Shane asks, what do you think will play out in the U.S. socially, economically within the next 6 months? I'm planning to head back to Florida in August to finish off what I started. Okay, I'm not sure what you started, Shane, but I don't see it getting better in the United States socially and economically in the next 6 months. I see it getting far worse. Hopefully I'm wrong. You're going back to Florida. If I had to be in the United States right now, I would definitely want to be in a Republican state. And that doesn't mean that I like Republicans or anything like that. It's just for the sole reason that I think there would be less rioting, looting in a Republican state, because I spoke to my buddy Robert Barnes about this extensively. And if you guys didn't see that interview, I'd highly suggest it. He's a lawyer and he is very, very high level. And he had a great point that usually you don't see too many of these protests, riots, or things that really get out of hand in Republican states, because the people doing the looting and the rioting know that there's a greater chance that they go to jail for XYZ reason in that state than if they go to an Illinois or a California where they're basically above the law. So my point, Florida, more Republican, probably a decent place to go. And I like Florida too, because you've got access to the water. And so you can't get too restricted, because if you've got some resources, you can just get a boat and, and say, I'm out. But to answer your question directly, I see it getting worse, not better in the next 6 months. Okay, Brandon asked, George, are you still buying PHYS? Any gold royalty companies? Was looking into RLGD, which fell recently. Worried about exposure to countries without access to Fed swaps. I am, Brendan. but that's just because I'm in lockdown here and I can't buy physical gold. So just be clear, I am buying PHYS because I from the research I've done, I like that a heck of a lot better than GLD. And I want something that has the underlying asset, in this case, gold. I'm doing that because I trust Rick Rule, and they hold their gold at the Canadian Mint, and that's their custodian. So I would much rather have that than HSBC. But to be clear, I still would prefer physical gold. It's just I can't get it right now. So when I get back to when this whole mess gets behind us, then I'll probably rotate out of PHYS into physical. As far as the rest of your question, I haven't really looked into royalty companies. That would be more of a speculative side of my portfolio, and I've pretty much got that filled up right now. Mark asks a question that I really like I answer every live stream, but I think it's so important that I want to address it. Is it better to wait to buy gold mining shares in case the stock market crashes? Mark, you're asking the wrong question. And I mean this with all due respect. I'm not picking on you or anything. This is, I'm glad you brought this up. It's you're looking at this the wrong way. Don't ask the question, is the market going to crash or is it going to go up? And if it's going to crash or go up, then I need to do this. That you're going to get really, I just think long term, you're going to end up losing money that way. You just start by asking the question, are the gold mining shares cheap right now? If they're cheap, buy them. I don't care if the market crashes. If the market crashes, then buy more. If you say, well, I can't buy more if the market crashes, then they weren't cheap to begin with, and you shouldn't have bought them there, right? So you don't buy them all at one time. Keep some dry powder, but just if they're cheap, buy them regardless of which direction you think the market's going. You've got to start with that question, and when you do long term, it's not like you're going to have 100% winners but just over the long term, you've got the probabilities on your side and you're going to come out ahead. Okay. I was trying to get another question here, guys. Bear with me. Okay, we've got an hour, so I'll do a couple more questions. Try to not go off on a tangent like I always do. Oh, okay, so issues with Chris Cole's Dragon portfolio. One of them is it makes no mention of specific assets, holdings, equities he back tested with, and long vol has lackluster risk reward, replaced with more commodities. I don't know if I'd go against it depends on what your objectives are. If you want just something that you're going to hold for 100 years, then I would just go, I would take exactly what he did. And as far as the specific assets, I think it's just because he back tested the S&P or maybe the Dow. But yeah, I mean, you don't have long vol in there to make money. You've just got it to hedge your bets, and you might lose money on it, but that's not why you're doing it. This is just something that you want to have the safest portfolio for the most diversified portfolio for the next 100 years. If you want to outsize your return, then you've got to look at the Dragon portfolio and say, okay, maybe I don't like long vol right now. Maybe I like commodities better, so I overweight commodities. Maybe I want to add some bonds from other countries that I think are a better buy right now. I mean, that wouldn't be correlated. That would be going way off the mark. But it all depends on what your personal objectives are. I think you're trying to maybe take a round peg and fit it into a square hole, or a square peg in a round hole. And I don't think that's a good way to go about it. How do I know if something's cheap? It's a lot easier to do with a commodity, because you can just look at a chart going back a lot of times, like 100 years, adjust it for inflation. So what I've been doing is I've been focusing on that, just me personally, because I know commodities are at a historic low relative to the stock market. So they're very, very cheap. So if oil gets down to negative $40 a barrel, as an example, pretty safe to say it's cheap right there. Then I would look at, I can't really play oil directly. So I'd say, okay, what's another way for me to go long oil? Well, you could go long the producers, in which case you want to look at their balance sheet, their P&L, do all that stuff. Just take the more of a bottoms up approach. Or you might want to stick with something that you know well. Back in 2015, I wanted to go long oil. So I bought Colombian real estate, because it was loosely correlated to oil, was loosely correlated to the peso. So if I bought a peso denominated asset, then I'm kind of going long oil. Now, I'm mostly with my pesos. I pretty much bought around 3,400. So we're, let's say, 3,600. So if you took just when I bought in 2015 to today, then you could say, yeah, I lost money on that, but I made a ton of money on the real estate. And that's why you kind of want to default to go back to what do you know best and start there. But it's just paper. It's a paper gain or loss throughout the majority of the time between 2015 and as of like 6 months ago, I was ahead. In fact, at a point in time, it got down to like 2,700 or so. So I had made a killing on the real estate from appreciation, from forced appreciation through the remodels to cash flow. And then I made a substantial amount on paper when the peso went from 34 down to 27 or wherever it did. But now it's back up. So on paper, I've taken a little bit of a loss, but I don't plan on cashing in my pesos. So if you don't cash in your pesos, it really doesn't matter. I'm getting a great return here. I'm just going to keep it in play, keep rotating it, keep doing it, real estate investments here. And when or if the peso gets expensive again, if it goes back to, let's say, 2000, then I'll consider selling my peso assets and rotating them into assets where the currency might be cheaper, or where I might be able to get a better ROI. Okay, let's do one more question. I really apologize about this live stream today, guys. I know it's really tough to watch, but I'm doing the best I can here. This thing moves so quickly and I can't stop it. Okay, a question on the TGA, and I'm going to leave with this question because I think it's something that everyone should be thinking about. Synergy of Two asks, how could the TGA or the Treasury General account be used to increase asset prices like equities this year? So they've got 1.6 trillion in the TGA, and how that's different from, so if they spend that into the economy, let me back up here. If they spend the 1.6 into the economy, that creates additional bank reserves, just like quantitative easing would. The difference is that if the Fed does quantitative easing, that only creates bank reserves. And then the commercial banks actually have to take an action in order for those bank reserves to turn into additional M2 money supply, broad money in the economy, to create or to increase the money supply. If the Treasury spends the 1.6, it does both. It increases bank reserves, but it also increases the deposits in the real economy, and it increases M2 money supply immediately. So it's a direct transfer mechanism. It kind of circumvents the banking system. So then to give it some context, QE3 was 80 billion per month. So if you think about what that would do to the M2 money supply and bank reserves, if the Treasury spent, call it $1 trillion in a month, I mean that's mind-blowing numbers, even for what we've seen in 2020. It's astronomical. So you would see, in my opinion, you would see consumer prices like on food just really go through the roof. But with all that additional money in people's bank accounts, they could go right into the stock market. They set up a Robinhood account. We all know what people did before. I had many videos that where I showed the headlines from CNBC that the majority of people in a certain, I believe it was that made between 35,000 and 75,000, the majority of those people actually used part of their stimulus, whether it was unemployment or just the basic stimulus check, to go into the market and buy stocks like bankrupt Hertz or Chesapeake or any of these others. So and that was with a lesser amount that was over a longer period of time. If they just did this massive sugar rush with $1 trillion, I mean, who knows what could happen to the stock market? It could go, I mean, it could easily go back up to 30,000. And it's based on zero fundamentals, but we know that really doesn't matter right now. In fact, it doesn't matter at all. That's not to say that you go in there and buy the market, because it's not cheap. It goes back to what I was saying there. I don't want to be too redundant, but just because I think the market may go up or may go down doesn't mean that you buy or sell stocks or commodities or anything like that, or gold. So I'm doing a video Tuesday on the stock market going to 30,000 while the unemployment rate goes to 30%. And I think that could be realistic. And so we're going to outline that on Tuesday's whiteboard video. Stay tuned for that. And that's where I'll leave it, guys. I want to thank everyone for your patience. We've got over 1,000 people on the live stream right now. That's fantastic. I apologize for how jerky it was and how hard it was to follow. And for those of you who want to take your investing to the next level, definitely check out Rebel Capitalist Pro. We've got a live stream this Tuesday for members with Lynn Alden. That's going to be amazing. And every single Thursday, we talk to Chris McIntosh. I think I might even start doing live streams for the members in there. We've got the webinar I did with Patrick for the Dragon portfolio, and then the member forum is just absolutely incredible. So check that out at georgegammon.com/pro. And lastly, I want to thank everyone that has stayed all the way to the end of the live stream. Almost 1,100 people right now. So that means, I'm going to go to the bottom. We've got Steve B., Emily, Billy, MJ, Tobias, Tony, Ruben, Brother Lance, Crypto Tharg, AJ Rodriguez, Brendan, Joe, RM, and 139, Ricardo, Chi, Albert, Billy, Juan, Aaron, Gerald, Edward, Craig, Zed, Mario, Crypto Angels, Mr. Scott, STR8 Stackin', Eric, Jim, Stevie, Jerome, Jeff, that's going too fast for me to read. Mike, Guadalupe, Wayne. All right, guys. Thanks for staying till the end again, and I will see you on the next video.